we're still looking at financial data analysis tools, which is Unit 2 or Unit 3, I beg your pardon, Unit 3. And we are looking at a section on business and investment valuation, how you value a business before you make a decision. Business and investment valuation is what we are looking at in these final moments we have before we close for the evening. Okay, so the purpose of business investment and valuation is you need to value a business before you take it over or you buy it over or before you even go into it. So generally in this session, businesses take over businesses. Limited companies take over limited companies, quoted companies, and you have initial public offers made. And also private companies are sold or they are merged with other companies, or they are there to establish tax liabilities, which is for unquoted companies. But then the purpose of valuation is to know the actual value or the worth of that company before purchasing. Very important. And that's the essential purpose of business valuation, to know the value of the business, the worth of the business, and what it takes to merge or purchase it or take it over. Speaking to limited companies, quoted and unquoted companies, the same. And the key takeaway is that the calculation is only part of the answer. So you must provide context, exercise judgment. That means you must discuss your reservations, your assumptions, then you must make your conclusions and recommendations based on the results. So the computation, like we said, will not get you through the case study paper, but then you still need to understand the dynamics of calculating mergers, takeovers, and some of this complex computation. You need to be able to navigate them to some extent. But what we are saying is the most important part is for you to provide context, exercise judgment, provide good conclusions and implementable recommendations based on your computation or results. So we have several valuation models, and we'll be speaking to some briefly. We have the asset-based valuation model, and this speaks to a type called the net asset value, or speaking to the book value of the business. So based on the SFP of that business, the net asset base is often a minimum value of that company. But you see, the SFP is where you make the computation. It's based on the SFP. So when you talk of asset base, you look at the total assets, speaking to the fixed or the non-current and the current. So the asset base value speak to the book value. What is the asset value of that company? That's how you value it. You look at their total assets. Sometimes if you're looking at the net asset, you're looking at the total asset less their current liabilities. So that's the asset-based approach of valuing a business. We also have the net asset realizable value, and its breakup value, not the book value now. What assets would sell at what value if the company goes into liquidation? So this is a method that looks at how viable the asset will be in the market. What asset will sell for in the case or a situation of a liquidation. So that's net asset realizable value or a breakup value situation. And that's another valuation method. We have the third one, speaking to the net asset replacement value. That's the cost to replace assets that are either obsolete or broken down or have depreciated fully. So the net asset replacement value is also a method of valuation, and it's used to value a business. So these are the three asset methods. Then we also have the income-based method. Remember, we have the asset-based method of valuing a business. Then we have the income-based method of valuing a business. Income speaks to the flow of revenue or profit. We have the the price earning ratio method. This values a business based on its earnings earnings in terms of income and the price earning ratio of a similar quoted company. And the formula is the earnings per share times the estimated price earnings ratio. So this method looks at the PE ratio of a company or a company in the same space or the same industry, and they are compared based on their earnings to see which one is more profitable or the other. So in valuing a business, that peer review helps to provide context on the value of a business. So it's subjective, but it's simple and it's commonly used. The PE ratio method is commonly used. It's not objective, actually, it's subjective, but it's commonly used. So we have the earnings yield method, another income-based method speaking to the variation of the price earning ratio. It uses the earnings yield of a similar company. And the formula is the value which is equals to your earnings divided by your earnings yield. And what is the earnings yield? It's what the business is able to yield from the market price of the business. So the earnings yield is the earnings price per share divided by the market price per share. So that yield from the market is the value that the business is worth from the income side of the business. So the earnings yield method is also a method that can be used to value a business via the income-based approach. We also have the dividend yield method. It's used for small shareholdings where the investor is interested in the income stream only. And the formula is the value, speaking to the dividends per share divided by the dividend yield. The dividend per share is calculated by as the total dividend declared divided by the number of ordinary shares that is out there to shareholders. While the dividend yield is the dividend per share divided by the market price per share, what the dividend, the market price is providing to the dividend of the ordinary shareholders. So those that are interested in this method are those that have small shareholdings and the investor is interested in income streams and just income, growing his income. So it's an income-based approach of valuing a business. Now we have dividend valuation models also, which speaks to the value of a share and is the present value of all future dividends, like the Modigliani and Miller model. They are models you could use. We also have constant model, speaking to the valuation model, dividend growth, returns. So you have also the constant growth model, where you have the retention ratio and you have the growth rate. It can be estimated using the Gordon's model. There's the Modigliani and Miller's model. So the Gordon's model looks at the growth, speaking to retention ratio by the times the return on investments. I think the examiner has tested this once. It's still in that same November 2014, where the Gordon's model was tested to value a business. So generally, that speaks to some of the valuation models. If you look at that November 2014 solution, you see where this Gordon's model was asked by the examiner to value that business, and the calculations were explicitly used there. You could use that context or that scenario in November 2014 to practice this practically. Okay, so we just spoke briefly to the third unit, financial data tools, and we are able to provide some context. And in the review of those past questions, the 4 of them remaining, we will reference some of them as those questions come. All right, so any question on the third unit so that we can move to unit 4? Any question, contribution, observation? Contribution also, any question? Okay, so in the absence of none, let's move to unit 4. Unit 4 speaks to performing accurate calculations in financial data analysis. Some level of accuracy is needed, and we'll be looking at that in financial data analysis. Though it may seem an obvious point to make anyone on the verge of qualifying as an ICAN chartered accountant, performing accurate calculations is a crucial starting point in financial data analysis. It may seem impossible, it may seem challenging, but then you must be accurate to some extent so that you don't make false recommendations or conclusions. So the reward of those calculations is given in the assessment box related to the relevant appendix. So remember those boxes we spoke about, 8 of them. Your calculations are those foundations of which you build those boxes, the write-up. So the reward for those calculations is your writing because they carry the chunk of the marks. So candidates for the case study exams must remember to start all calculations with the information provided in relation to the analysis to be undertaken. So your calculations is the first thing. So after you've mapped out your pages, you've left page 1 down to maybe page 20, your 21, 22 down should be your calculations so that it will form a base for your writing. And subsequently, you need to flex the numbers. Work carefully in consistent denominations. So do not start in thousands with decimal points and then carelessly drop into significant figures, or sorry, single figures or vice versa. So what this point is saying is you have to carefully follow the denominations from tens to units to thousands, like that. Follow it sequentially, the way it will help your reading in calculation from the lower ones to the harder ones, and don't carelessly drop any single figure so that it don't complicate matters for you during the exam. So start from the bits, the ratios that are small. Then for the financial data, you go for the numbers less before you go for the harder ones. Also label all figures. What may seem apparent to you is not necessarily apparent to the reader in a report. So please label all figures. This is a serious error or omission if you don't label all your figures. So for Appendix 1, state it Appendix 1, Appendix 2, Appendix 3. So label it appropriately. If you omit it, you won't be able to cross-reference it in your interpretation and communication or explanation. So candidates are advised, we are financial data analysts, that it is very important to step back and perform a sense check or a logical check or logic check on the calculations and numerical output to avoid basing a report on basic numerical error, which a quick overview could have detected and clarified or simply help to rectify. So you are advised, this is the examiner saying verbatim, as financial analysts, you should step back as you are making those calculations to provide a sense check or logic check. And the only way to perfect this act is by practicing past questions. So like I've provided the November 2014, go through the video, download the report, and look at how those calculations were done on Gordon's model, were done on the product mix, were done on, so you are tuning and harnessing your skills to avoid some miscalculation errors, to also help you to be able to check and cross-check and detect anything that would mess your calculation up, because it will culminate in wrong decision-making and also wrong recommendations. That's very important. So that's generally what speaking to performing accurate calculations in the financial data analysis is all about. So check, sense check, and a logic check are the keywords you should take home with you. All right, so any question on this short unit? I love it, very brief. It was briefer than unit 3. Any question? All right, so we move to unit 5. We need to evaluate evaluation of all assumptions in our financial data analysis quest for financial data analysis prowess. So where the financial data analysis is based on assumptions provided by the client or a third party, there's always an implication, because you are not the one that came up with those numbers. You were given those numbers. And most of them are not validated by either an audit or another reviewer. So If it's not an actual requirement that you should evaluate those assumptions, you should carefully identify any assumptions that you need to evaluate, especially where those numbers are not provided by you and they are not reviewed or audited by another person. So you should assume that the lists are frequently interwoven in the information provided on the issue. So your assumptions should state clearly that maybe in the area of issues and options or professional skepticism, should state those assumptions that these numbers in the financial data need to be either checked or second checked or reviewed by management to ensure their accuracy. And that's what the evaluation of all assumptions are all about. So to do this evaluation, you must first identify the assumptions to be evaluated. They may be listed as they are frequently woven into the information provided on the issue in the case. So the case study generally, as in real life, assumptions are often provided as a starting point for your calculations and consideration of either a financial issue or a non-financial issue. But these assumptions should not be viewed as set in stone. What does set in stone mean? They can and must be questioned. They are not final. That's what set in stone means. So they can be questioned. Most of these assumptions, the financial numbers, you can question them and write about them, especially where you have doubts. Don't change them, but just speak about them. That's what the case study is about. Your professional skepticism is where that plays practically. The skillful questioning of information provided is part of your professional skepticism. So if any additional assumptions have to be made, or the assumptions already provided need to be queried, and you need to make any financial adjustments, you need to do that skillfully. I'll be looking at flexing the numbers in another unit. We'll be seeing flexing the numbers and how you can make adjustments, not to change the numbers, but adjustments. And it's part of your skill. It means you are applying your judgment. And all questioning should be clearly identified, and your reasons to justify your questioning and your assumptions should be provided in the report. So the evaluation of assumptions are very important because your inquiry and questioning mind is brought to play here, which is a critical skill that is examined and tested by the examiner. All right, so that speaks to evaluation of all assumptions and the end of Unit 5. Any question, contribution, observation on that unit? Any question? Okay. All right, so let's look at Unit 6 as we are running fast. Unit 6 speaks to professional skepticism in financial data analysis. Professional skepticism. It's important to be aware that development of financial diagnosis must be made with regard to the context of that case or the exhibits or the scenario provided to us. So the nature of the information provided and its source, both in case and real life, must be questioned. And it's a critical part of the analysis of any financial problem. The appropriate questioning of the information that is provided is the professional skepticism skill we are displaying. So professional skepticism refers to the professional intelligence, awareness, and initiative brought to bear on the information for you to be able to question it. So critically question the information you are given by asking, who prepared it? Why was it prepared? What is the accuracy? What predictions are included? What is the level of priority? So for the financial statement analysis, for example, we've looked at that. You must check whether that financial statement or management account has been audited. That is a second review provided. Also for financial data analysis, you need to ask this critical question. That's your inquiry and questioning mind. Very important. So please take note of that. So whose perspective is it from is another question. And it shows your judgment and it helps you access the quality and appropriateness of the data, so that you will not be basing your calculations or judgments on wrong information or data provided. And that's why professional skepticism is imperative and very critical for the case study exams. All right, so we know what professional skepticism is about, and that will be the end of Unit 6. So please feel free to interject if you have any question or clarification or contribution or observation. So we'll be looking at Unit 7, flexing the numbers, and also back to sensitivity analysis again. So how do you flex the numbers? Adjusting and speaking to sensitive areas in form of sensitivity analysis. So you don't just accept the figures at face value. You must be prepared to adjust figures where necessary based on errors or new assumptions, and comment also on the impact of those adjustments where you see deemed wrong. So you have to know where the errors are and also provide your adjustments very, very pragmatically on the case. So following on from an assessment of the assumptions initially provided, a critical element of financial data analysis is the ability to flex the numbers given or those numbers calculated and then comment on the adjustment impact or the adjusted impact. So in the case study exams, this may be number one, correcting a series of erroneous transactions or dealing with, proposed adjustments to information on the exhibits. So you must be able to identify the errors. So once you detect an error, you should be able to deal with it by recommending and proposing adjustments to the information. And also flexing a forecast to reflect changes in the underlying assumptions or the organization's circumstances. So a forecast could be provided. We've had past questions where we are asked to forecast a revenue based on 5 years trend. And that forecasting is based on some assumptions. So you need to be careful with the forecasted assumptions, the percentages used, and the numbers they use to flex those forecasts. You also need to assess the assumptions and making the changes that are needed to reflect or to be reflected in the amended calculations, and state where the amendments are in the appendix and also explain them in your body of report. So you have areas of break-even or pricing in a tender or even a forecast or a budget. So sometimes the issue is obvious because errors have occurred in the information that is previously provided, and this needs to be corrected based on your judgment. Very important. So take note of that. So often it is left to your discretion whether flexing the numbers might be appropriate or not. And one of the analytical tools available is sensitivity analysis. Sensitivity analysis, especially for critical numbers that could affect decision making. So sensitivity analysis involves, like we said earlier, identifying the critical factors in any numerical calculation and considering the potential effect and impact on the results of changing the values of one or more of them, like revenue, cost of sales, direct or indirect costs, that will culminate in the gross profit or the contribution. So be sensitive and be very careful. That's why it's called sensitivity analysis in such decisions or such adjustments. So in the case study examination, you are not expected to perform endless similar speculative calculations. Accordingly, it's important to identify your CSF, your critical success or your critical factors with care. So in the case study, you will not be required to provide voluminous calculations. In fact, last diet, we saw that the pricing did not even come with any calculation for the first time in 22 diets or 21 diets. So the examiner is gradually reducing the calculative aspect to more of decision making. So this diet expect to see more of less calculations so that you can concentrate on more reporting, helping stakeholders and your clients with information for their decision making. So the case study exam is not about endless calculations, even though some of the calculations in the past can be very technical and challenging. I could attest to that. But then your critical factors must be identified with care. And a crucial element of the process is that you do identify instances where a number or your numbers should be flexed. That means should be changed or adjusted. Even if you do not carry out all the calculations because of time constraints, which will always be there, You must comment on the likely impact and direction of change in the respective figures. So whatever changes in the figures you perform, you should be able to state unequivocally what effect and impact they will have on the overall decision making the board is going to make. So candidates should know that whatever the time pressure is, which will always be there, time management is a technique that is tested also in the case study exam. They will receive no reward for all at all. You will receive no reward, no matter the pressure, for recommending that sensitivity analysis should be performed, or that all numbers should be reviewed for accuracy and estimates flexed. So these recommendations are not smart. You can't make such recommendations. You have to make recommendations that are smart, which are specific, measurable, attainable, realistic, and time-bound. So recommending that sensitivity analysis should be performed is out of place for candidates. So take note of that. Very important. The examiner is stating very clearly here. Then candidates are expected to have done this sensitivity analysis themselves by writing it as though it were a recommendation. So they were simply emphasizing their shortcomings and therefore a real weakness in their work. If you're asking management to do something that you are supposed to do for them, I mean, it's like saying, I'm not doing it, or do it yourself. So why are you paid as an analyst to come help them do the job? That's what we are saying. And that speaks to flexing the numbers, speaking to adjustments and changes, speaking to sensitivity analysis, could experience in financial data analysis. Okay, so that will be the end of Unit 7. We're running, and feel free to interject where you have questions or concerns. So Unit 8 speaks to plausibility and numerical output. Let's look at Unit 8, plausibility and numerical output. So what does plausibility mean? Plausibility, what does that word mean? It means something appears reasonable, believable, or likely to be true. That's what plausibility means. So let's look at plausibility and numerical output. Before diving into calculations, do a quick review. And that's what to check if what you are doing is reasonable or believable or likely to be true. So you need to do a quick review. Is it better to be approximately right, quickly, or exactly right, but run out of time? So you need to check that, do a quick review on that. And I'll take it again. Is it better to be approximately right, quickly, or exactly right, but run out of time? So whatever the circumstances be, whether it's approximately right you want to choose or exactly right, it is important to pause before plunging into the work. So candidates should initially perform a quick plausibility review of the details involved in the exhibits and the expected output from the work. Very important. So that complex word plausibility means something appears reasonable, believable, or likely to be true, even if it hasn't been proven yet. That's what it means by plausibility. So please make sure you do a quick review on the details of your expected output. The output is very important, and choices need to be made about all calculations and any subsequent flexing of the numbers. So your accuracy versus speed now is that it's better to be approximately right than to be accurate. And it's practically difficult to be accurate. Like in the case study, they said there's no right or wrong answer. It all depends on your analysis. So approximately right and cover more ground is very important. So you don't waste time trying to say you must get the nitty-gritties or be accurately correct 100% in your calculation. No. You waste more time and cover less ground. So be approximately right and move on. Because if you can be absolutely right and you leave some details and you also risk failing to finish the work and also risk failing the exam. So please try to be approximately right. In your practice session, look at how fast you could be in your calculations and gauge yourself and judge yourself appropriately. So what is necessary here is not sloppy guesswork, but especially in the case of forecast, they need to arrive at a reasonable, accurate answer quickly. It's important to some reasonable extent. So don't do sloppy guesswork or shabby calculations. But in the case of forecast, they need to arrive at a reasonable, accurate answer quickly and reasonably is essential. So we've looked at accuracy versus speed. Let's look at materiality against summary. Materiality, the extent and magnitude of items. Can any of the calculations, you need to ask this question now, can any of the calculations or adjustments be grouped to save time? And will it really matter? So these are questions you need to ask. Because this does not mean aggravating everything into one meaningless figure to be explained later in a rambling, incomprehensive paragraph of notes. So materiality against summary is a question you need to ask and you need to look into critically. So the calculations or adjustments, can they be grouped to save time? And will that matter? And does this mean aggravating everything? So these are critical questions you need to ask as you are performing your analysis. So instead, it requires the judicious use of effective and understandable summarized workings for your key figures. So the materiality important, summary important, but then you need to be effective in understanding which is appropriate at that time. Very important. Then the next one is originality or substitute. Original or substitute. You need to ask whether your output would be an appropriate substitute for the analysis, or you build on information given to you in the exhibit. Do you have a template to follow? Critical question. Instead of starting a new template or a new computation by wasting your time. So we have a template in most of those ratios. Rows is rows. Gross profit margin is gross profit margin. So you have a template just to calculate. Is this template still the most appropriate format for your new working? You need to ask those questions. Can it be amended easily, or should a new template be substituted? So original or substitute, ask that question. And most of the time, if you look at the past question, the trajectory of all the past 22 diets, you could glean from what is frequently asked and what templates to use that have been provided, so you don't waste your time. You just align properly. And also explanation and impact. Explanation and impact is another area we need to speak to. What is the client's potential understanding of the issue in hand? And that might affect any potential adjustments you want to make. And it could be fundamental to the whole company or the enterprise you are looking at. So impact is very important. Speaking to the effect, very important. Take note of that. So in the report to the client, what level of detailed explanation of assumptions and technique and the resulting impact of your work, you need to provide that to the client critically in the explanation of your assumptions. And also your appendix or your body. Will the reporting format for your workings be presented as a clearly labeled or cross-reference appendix? That is highly recommended. Or is it concise enough to feature in the body of the report? So the appendix should come last and they should be cross-referenced into the report. We've been advocating that right through from the beginning of the lectures. So in the case study exams, candidates will be assessed on their ability to make these decisions and how they present them. And like I said, practice will help you harness these skills, and under exam condition, you'll be able to sail through seamlessly. So candidates are not expected to perform also endless similar speculative calculations like we said, but are expected to be alert to the impact of sensitive key factor changes. And it is assumed that if the problem can be addressed by adjusting some financial facts, you can do that critically. Then you should make the numerical adjustments and present them accordingly and similarly. So, you'll be able to look at the exam technique, which time management is one of it, and not waste time in rewriting a whole financial schedule that you provided in the appendix. It's just to interpret what is in the appendix in your report. like forecasting a financial income statement. If you provided the schedule in your appendix, it's just to interpret what you've calculated. So there shouldn't be wasting time in performing inordinately time-consuming calculations of dubious accuracy and materiality using an estimate. So for example, making an adjustment of a single estimate or estimated expense, like a 1 month's depreciation, is immaterial and could waste your time. So if it's a 1 year depreciation, okay, you could have an issue with computing that in the appendix, but then be very fast in your computation is what you are saying. And the materiality of what you are calculating also matters, because your stakeholders and clients will make decisions based on material issues that affect their economic decisions. So when there's a major impact you've assessed or effect of any numbers, for example, is the corresponding figure for acquisition of non-current assets, which has an overwhelming impact on the forecasted statement and future cash balance. So areas of material effects, you should look at them. If they are brought to the fore to the board or the client you are speaking to, will it affect their decision? So this is very important in understanding plausibility and your numerical output for your write-up and decision making. This is key. So we need to take note of that. All right, so that will be the end of Unit 8. Any question on Unit 8? Any question, any contribution or observation? Okay, I believe our quietness means we are deciphering and understanding our conversation. All right, so let's go to Unit 9. And we are running fast so that we can cover the chapter. Most importantly, we want to be looking at the past questions. They provide credence to this lecture and the study text. So we'll be looking at interpreting the results and reconciliations. Very important. After all the numbers, technicalities, you need to interpret them for decision making. So don't just present numbers. Key. Numbers are not enough to pass case study, and numbers will not help your audience or your client or whoever it is has engaged you in the job. So don't just present numbers. Very importantly, explain what they mean and why are they important. What do they mean? What do they mean? That's essentially what the case study is about. What do the numbers mean and why are they important? So answer the questions why and so what. So you see, why and so what are very critical questions you answer for the client. So in your advice to the client, you need to explain why and so what. And the numbers and their explanation speaks to that very practically. This is very important. So it's important to also emphasize that working with the numbers does not stop with the calculation themselves. So the output, whether from an analytical technique or sensitivity analysis, needs to be explained to the reader of the report. We can't overemphasize this. And those are your boxes, your 8 boxes of explanation. So whether interpreting results, all too often, a candidate tries to describe what could be done rather than what actually doing the work entails, and then discussing the outcome. So in interpreting the result, you need to explain the work and the decision outcome. So look at the decisions that will be made from that work and interpretation you've done and how it could possibly move the company forward. So the effect of what you are explaining, that's why we said your recommendation should be smart. Whatever you are recommending, you will have analyzed it, dissected it to see if it will help the client. This is very important because we are trusted advisors, we are strategic partners of businesses. So you need to make these interpretations and the work, the outcomes and the effect should be positive for your decision makers. Also, attempting to describe a financial outcome without providing the adjusted numerical picture is a weak piece of financial data analysis. Yes. So the calculations are the foundation for your interpretation. So you need to at least provide a numerical picture first in your data analysis before providing the recommendation on what the outcome to be. Very important. Like I used to say, I had a candidate that wrote the case study paper 3 times, and he's been having challenge. So he came to me and said, how am I filling this paper now? And I said, okay, let's do a mock. Let me see what you are writing and how you are writing. And when he presented his first mock, I deliberately failed him because I told him, well, if you continue like this, you keep failing the case study paper. He said, why, sir? I said, I don't see your calculation. You just go and write a report, but I don't see the foundation. There's no calculation in your appendix. He said, no, that he assumed the calculation in his head. He did the calculation in his head. And since the report carries more marks, he just decided to write all the boxes. That's more important. I said, no, we need to see the picture of your numerical computation. We need to see it as an appendix. That's why the examiner said, provide appendix. And that provide credence to what we're speaking to on this slide. So the presentation of the financial pictures or picture of the organization needs clarity to make a direction or direct impact on the reader. Very important. So it will also provide evidence of the candidate's real financial data analysis ability. Yes, so your ability to flex numbers, provide calculations is tested, and above all, your communication skills are also tested. So candidates will also need to provide answers to the questions of why and what when formulating their advice to the reader. We've said that earlier. So interpretation of results and reconciliations of numbers are key. And this is where your mark earning starts. Okay, so any question? Gradually running. We have about 11 units and we are at the 9th unit. We just concluded the 9th unit. Okay, so let's look at the 10th unit and see if we can finish up in this class. The 10th unit, which is making financial decisions, conclusions, and recommendations. Making financial decisions, conclusions, and recommendations. So your decision must logically flow from your analysis, which are your computations. So they should be clear, unambiguous, and confident. So don't make them cumbersome, don't make them complex to understand. So your decisions and your write-up should be clear. And that is why, based on those boxes, you see we provided comprehensive write-up for you to read through and also follow through such formats to be able to write comprehensively. So they should be clear and unambiguous and confident. So all financial decisions are presented in the conclusions and recommendations. They must flow logically from the financial data you've analyzed based on the professional judgment you've also applied to the analysis. And it may be necessary to highlight some reservations, provisions, or parameters around the final decision you are making. Any decision you make would be expected to be an unambiguous and clear conclusion, indicating confidence in what you have done. And you also need to develop those conclusions, into clear advice by way of recommendation. So, like I used to say humorously, your conclusions are the statement of the problem or summary of the problem. Then your recommendations are proposed solution to those problems. Very important. So that's it on making financial decisions, conclusions, and recommendations, which is in your 7th and 8th box. And don't forget, without making appropriate conclusions and recommendations in any of the requirements, you cannot pass case study. It's clear. No matter how you've analyzed the 6 boxes, if you don't conclude and recommend, you will still come back to write the paper. I'm not a false prophet or I'm not a soothsayer. It's certain. So your conclusion and recommendations are very key to passing the paper. Okay, so the final unit, and I hope we close with this before we go to bed, is using financial data analysis in your case study exams. How do you use financial data analysis in wrapping up this fantastic subject? So the case study versus other exams, you see that the case study exam is more open. There's no right answer. Like I've said severally, there's no right or wrong answer. The examiner assesses your approach and ability to use data meaningfully. So the ability to use, calculate, interpret, and explain data is what you are assessed on. Please take note of that. And that's what the case study exam is all about. So to succeed, you must, number one, choose the right tool. So where you're not provided in the requirement with a tool, please choose the right tool. Like in the last November paper, we saw that NPV was the best tool to use, even though it was not asked for. And we used the NPV and we arrived at the result and explanation we needed. So Second point, first point, choose the right tool. Number two, provide context and rationale for your choices. Why did you choose such tool? So explain them. Also use judgment on materiality, the magnitude and extent of amounts and figures, and the level of detail needed to provide explanation to your client. Then create clear appendices with your workings. Yes, like I've said severally, without appendices, you don't have a foundation for writing. So provide clear appendices and your workings. Then evaluate your assumptions and apply professional skepticism, like we said, your question in mind. Then consider sensitivity analysis where necessary and flex numbers where appropriate. We've said that over and over again. And build a logical report with clear explanations in the 6 boxes, and the 7th box is your conclusion and recommendation. Be confident, be decisive in your recommendations. It's clear the problems. So from what you've read from the exhibit, be confident in making recommendations. Don't be skeptical, don't be scared. Make your recommendations unreservedly. As long as your decision is consistent with your analysis and evaluation, your marks will be given very seamlessly. You see, I've marked mock exams, I've marked several papers. I'm not an official marker, but then I know students that will pass and I know students that will fail. When I mark mock exams, I'll tell you unequivocally from the mock I see, if you follow this format, you continue writing case study. And there are some students I see their mock exam and I tell, no, you pass it. And most of my predictions, 80-90% are always correct. Very few candidates are how did you fail the paper? What happened? What did you write? But most of the times it's clear because the paper is easy to write. The instructions, in my view, are clear on what to do and what not to do. So it's very important to understand how to use financial data analysis. And at the end of the day, it cannot be overemphasized. Practice, practice, practice. So like we've just finished chapter 3, we'll be going to chapter 4, either Friday or Saturday. If I don't travel on Saturday, we'll move to chapter 4. So I will expect you that are on this call, and I'll be listening to this recording later, to pick that November 2014, and flex the numbers, read through the report, and understand the dynamics on how to approach financial data analysis like we've just described in this session, so that when we come to questions related to that, it will be easy for you to flow. The flow will be very easy. So that's what I expect of us. Please do that to fine-tune and harness your financial data analysis skill. And I believe November 2025 is going to be a walkover for you for the case study paper. So ladies and gentlemen, thank you very much. We have quiz questions actually. Can we do that in 2 minutes so that we can just test if we understood the subject? Can we do that? Or when we come back in the next class, we should do the quiz question. We have just 2 minutes or 1 minute, or we close. Let me have an opinion poll on that. Which do we suggest? AK, AA, NA. What do we suggest? Can we take the quiz or we should come back in the next class?
The next class, sir.
Okay. 1, AA.
Yeah, I think maybe we should take it.
You should take it now? That will be another 10 to 15 minutes to conclude that. Okay, we should take it. So 1, take it, 1 next class. Okay, so AK will now decide now which we will do. All right, AK, please unmute and speak. What's your decision or what's your take? We should take it now or in the next class? I hope AK is on the call.
Take it now.
Okay, let's take it now. All right, so 2/2, if we are using democratic system now, the take it now, have it. Let's use our Senate president's word. The take it now, have it. All right, but we'll run very fast because anyone wants to sleep. Let's run very fast through it just to test our knowledge on what we've done practically. Okay, so let's go. Quiz question 1. So I have AK, and I have AA, then I have EO. All right, so question 1, what is the primary goal of financial data analysis? A, to collect as much financial data as possible. B, to evaluate a financial issue and reach a decision. C, to create complex financial models. D, to generate financial reports without interpretation. What is the primary goal of financial data analysis? AK, what's your pick?
B, to evaluate the financial issue.
B, okay. AA, what's your pick?
B.
Okay, B. EO, what's your pick?
Is B too.
Okay, EO is picking B. Okay, that was fast. That's good. Number 2, which of the following is not considered good financial data analysis? A, explaining forecast sales trends to a CEO. B, presenting financial data in a clear and comprehensive manner. C, performing sensitivity analysis and evaluating assumptions. D, communicating findings appropriately with judgments and recommendations. Which of the following is not, take note, not considered good financial data analysis? I'll take the options again. Explaining forecast sales trends to a CEO. B, presenting financial data in a clear and comprehensive manner. C, performing sensitivity analysis and evaluating assumptions. D, communicating findings appropriately with judgments and recommendations. Which of the following is not considered good financial data analysis? AK, what's your pick?
A, explaining forecast sales trend.
Okay, AK pick A. Then AA, what's your pick?
Yeah, A is what I'm looking at too.
Okay, are you picking it or you're still looking? Let me go to EO as
No,
you
no,
are
no.
still looking.
I think yeah,
Okay, you pick A, all right.
I think
E, okay.
Yeah, same thing with me too.
You are following the
Hey.
crowd. Okay.
No, I don't.
We'll see on Judgment Day. Judgment Day will determine if you are correct or not. All right. A. Okay. So let's go number 3. What is a key component of financial data analysis? A, avoiding the use of analytical tools. B, using appropriate analytical tools for the task. C, ignoring the intended audience. D, presenting financial data without explanation. What is a key component of financial data analysis? Let me start with EO. EO, what's your pick?
Okay, B.
Okay, EO, B. AA, what's your pick?
yeah, it's B, man.
Okay, A is picking B too. All right. AK, what's your pick?
B.
Okay. Everybody's aligning. Same options. Okay, number 4. Why is it important to consider the audience in financial data analysis? A, so the analysis can be tailored to their understanding. B, to impress them with complex calculations. C, because financial data is always self-explanatory. D, to make the report as lengthy as possible. Why is it important to consider the audience in financial data analysis? Okay. AK, what's your pick?
A.
A. AA, what's your pick?
Yeah, I said A, sorry.
Okay, it was AA that said A. Okay, I thought I had AK. All right. AK, what did you pick?
A.
Okay. EO, what's your pick?
I go with the crowd.
Okay, so if the crowd is wrong, just know you fall with the crowd. And finally, what is the final step in the financial data analysis process? A, gather raw data. B, identify financial trends. C, interpreting results and making recommendations. D, performing calculations without drawing conclusions, extensive technical jargon to impress the report reader. Okay. What is the final step in the financial data analysis process? AK, what's your pick? The final step.
C, sir.
Okay. A is picking C. All right. AK and EO, what are your picks?
Yeah, C too.
EOC. Seems all of us are aligning with the same options.
C.
Okay, AK. All right, AK is picking C. Fantastic. All right, that was fast. That was cool. So let's look at the answers. Number 1, what is the primary goal of financial data analysis? B, and all of us are correct. Financial data analysis is conducted to assess financial issues and make informed decisions. Exactly. So, nice one. Nice pick. Number 2, which of the following is not considered good financial data analysis? The answer is D, communicating findings appropriately with judgment and recommendations. So I know everybody will be surprised. Why is it not good financial data analysis? The explanation is that this is not actually a key aspect of good financial analysis. So the word not in the question makes it the correct answer. So what did we pick? Everybody picked A, explaining forecasted sales trends to a CEO. While this provided information, it's not considered strong financial analysis if it lacks deeper evaluation or insights. So everybody picked A, so take note of that. Even though the case study exam is not objective, it's subjective, but then the word not, if you are writing exams like CISA, CIA, you see all these kinds of questions. So it said not. So take note of that. Okay. And number 3, what is the key component, or what is a key component of financial data analysis? Yeah, we got it. B. Using appropriate analytical tools for the task. And the correct use of tools help in interpreting financial data accurately. Correct, we all got it. Number 4, why is it important to consider the audience in financial data analysis? Yeah, we all got it. A. So the analysis can be tailored to their understanding, and the way financial insights are communicated should align with the audience knowledge level. Exactly. So EO went to the crowd and she sailed with the crowd. All right, that's good. And finally, what is the final step in the financial data analysis process? The answer, we all got it. C. Good. Interpreting results and making recommendations. After performing calculations and evaluating assumptions, the next step is to interpret findings and provide actionable or implementable recommendations. Ladies and gentlemen, that makes a lot of sense, and I'm glad we all have 80% understanding of the subject. So AK 80%, AA 80%, and EO 80%. That makes a lot of sense. And if you get 80% in the case study paper, I mean, that's incredible. You even did better than me. I scored 78. So if you do 80%, man, you have beaten me, because out of my students yet, nobody has beaten me. In the last diet, the person that did the highest out of my students scored 70. So I was like, well, you are close, but you are still not, you've not still beaten your tutor. So let me see if AK or AA or EO will replicate 80. If you score 80, I think I will give you a prize, not just a prize, a special prize. That I found a student that finally has beaten.
That is, you need to groom me very well.
Yes, so I need to groom you very well, but you need to practice by yourself. So you need to practice plenty past questions and the work, the grind. You need to put in the grind then. So let me see if somebody will do this 80%. AKA and EO. I'm putting it as a challenge now. If you score 80% in case study, huh?
Hello, sir.
I said that's a big challenge.
Yes, big challenge. Yes, please. AK, go ahead. Yes, please.
If you work on the 2019 digital farm, the report, I will send it to you as an assignment.
Okay, no, since I've already provided the report, you can't send it to me as an assignment. So what we'll do is, after we've done the 5 questions, the diets will be testing, I'll be giving you 1 or 2 mock exams without the solution, and it will be among the 5 we'll examine. So I'll give you a mock exams that you do and send back to me. So that will be after we finish the course. We are preparing to get the pre-seen. So mock exam will come, 1 or 2 questions that have not been examinable, so that you will not look at the report and answer. So I'm going to provide you 1 or 2 mock exams to do on your own, and you do it in 4 hours. Though we will not have it on a call.
I think I am trying to understand what he's saying in the sense that before the mock exam, maybe
Yes.
with the fact that we have done one what's it called?
Okay,
One
we've done
review.
one diet past.
Maybe
Yes.
we should just do it on our own and share with you, not that particular one, but possibly another exam.
Okay. AK, is that what you're trying to say? Because AA was providing
Yes.
context to your question. Okay, that's what you're trying to say.
Yes.
Okay. Okay, so good one. Is a good suggestion. So what I'll do is, can we do this next diet? Let's do 2. Then the third diet, you can now try it. Let's do 2 first so that
Okay.
you will have seen how
That's
I've
fine.
done the 2. So let's do so let's do 2 diets. After this chapter 4, we go to a next diet. Then in the third diet, I'll now provide the question, the pre-seen, the unseen. You can now try that. Yes, so it's a good suggestion. So let's do that. But we'll still do our mock anyway, so that you can get grounded and let's see if you can score 80%. Good approach and good contribution. Thank you for those suggestions. So the next question we'll be looking at is, we looked at November 2019. We'll be looking at March, June 2020. Very complex question. I went through it and I was like, this examiner now, wow. But then that's ICAN for you. The standard is always high. All right. So any question, any contribution? I've already taken 12 minutes of our time, but it's been productive and resourceful. Any questions so that we can shut down?